We're going to hang on a little longer for some people to join. Good morning, good evening, or good afternoon from whatever location you're at. Maybe just give it a, we see we have a number of people joining at this stage, so let them come through. Okay, thank you very much. We seem to be plateauing there. Welcome to today's webinar. My name is Paul Price. I'm the CEO and founder of Haven Green. I'm delighted to be joined once again by Antoine Blondeau, co-founder and managing partner of Alpha Intelligence Capital. Those of you who joined our last discussion with AIC will know that Antoine's expertise in the AI space is unrivaled. A true technology veteran. We really enjoyed his insights last time around investment opportunities in AI, and I would encourage any of you who missed the live webinar on that occasion to catch the playback as well. Antoine, thank you once again for joining us.
Paul, it's always a pleasure to be together with you on this. So thank you for this.
Perfect. The AIC is currently raising for its second fund, and I would like to uncover today some aspects of how you are deploying the capital raised so far. What is most exciting to you in this space, a space that is, feels like it's ever evolving. So, and I think you might also talk a little bit of how you separate the winners and the losers. So perhaps we'll start there, Antoine. Can you speak to AIC's deal flow and how you source opportunities and access and evolve your thinking around that AI ecosystem today?
Yeah, I mean, first of all, you hit nail on the head. I mean, this is such a fast and dynamic space. It's incredibly busy, but good busy. It's when I look at what we're doing every day, I wish that we had double the amount of time to handle the deal flow that we have. And not all of it is quality, but a lot of it is. And I think, interestingly, a year in, and when I say a year in, I say a year into the deployment of our Fund 2, I think we're beginning to see an increasing amount of good quality companies. So, of course, there's still a lot of hype, but I think people are starting to see that hype doesn't necessarily pay off. What you have to do is to build real businesses. You asked the question about deal flow and where we get it. Today, it's about slightly over a third, I'd say 36, 38%, that comes from our very own network. So ourselves and our advisors. Another few percent come from our LPs as well as our portfolio companies. And then we have another third or so, slightly more, that comes from friendly VCs, so friendly co-investors, people who see us as the expert in the AI space. And lo and behold, we are folks who tend to go very, very deep when we go and due diligence companies in terms of the technology stack and the science that underpins their product. And so we have that reputation. And so as a result, we get a lot of folks who come to talk to us about what they're looking at and just ask for our input. So that's the way that the deal flow is broken down today, more or less. Maybe last point on this, it's almost entirely inbound. We do some selective outbound in places where, or in use cases where we believe that there is a gap and the gap is not filled. But otherwise, it's entirely inbound.
Mm-hmm. And typically, what stage is it that you would look at investing in those companies themselves?
So Series A and B is our sweet spot. So Series A is, product is taking shape, revenue is forthcoming or just getting into revenue. And then Series B is you've proven that you can achieve revenue traction, and now it's about starting to put pedal to the metal and starting to grow, right, meaningfully. So Series A and B is our sweet spot. We do also selectively do seed, as well as later stage first tickets. Why do we do seed? We do seed because we want to be sometimes in very high conviction companies, where we think the team is stellar, technology is stellar. They are very early, but we want to be in as part of the initial round so that we can deploy large amount of capital and be first in line, if you will, when Series A comes around. And we've done this a couple of times last 12 months, and I think very successfully so. And I think it's going to be a good model for us going forward.
Mm-hmm. And typically in those circumstances, is that the 38% that you refer to, where you find those from your own network when you go to that level?
For sure. I mean, those are folks that we either know from before, or advisors know from before. Those are folks that typically have been in the industry for 10 years, 5-10 years, and are just branching out. They're seeing a meaningful gap and just trying to build $1 billion plus company, and they're looking for people who actually understand what they're doing. And there's not that many people, in all humility, that actually do understand what they're doing. And so that's what we do.
Yeah, and your advisor network that you have, which is obviously very extensive in terms of the individuals that have come and joined you in this journey. They obviously in themselves are an incredible methodology of screening in this space too.
Yeah, I mean, you and I were talking just a few weeks ago about Jan LeCun, who's our one of our advisors, who he's the chief scientist at Meta, and probably one of the most competent individuals in the space, one of the 3 Turing Prize winner, and certainly one of the fastest of deep learning. And Jan himself will funnel us deals from time to time. In fact, just now I was on WhatsApp with one guy that he connected us with just a couple of weeks ago. So that's very important. It just gives us credibility, but also gives us reach, right? So we do care about that.
Well, of course, none of this is possible unless you actually are able to raise the capital. And of course, we at Haven Green are delighted to be your partner in doing that with you as well. Maybe you could talk a little bit to how that capital raise is progressing in this, your second fund. Maybe talk about closing schedule. How are you deploying the capital to date? So maybe take us through a few of those thoughts.
Yeah, so I'd say we're slightly over halfway in terms of our capital raise. We're our target is 300, so we're slightly over halfway that. We've deployed quite a bit over the last year. So the first close was a year ago. We've got 11 companies, soon to be 12. Total capital deployment so far has been about $36 million. So it's a bit lower than the average that we've modeled, but that's simply because this is very early in the fund cycle. And so, for example, some of these companies in which we've invested at seed stage eventually will be recipient of reinvestments from us. And that's going to mean that the overall exposure of this company is not going to be $1 million, $2 million, $3 million, but eventually $5, $10, or even $15 million. So that's that, and we're very happy with the pace. We were a little careful at the very beginning. First 6 months, we took our time, but we've done 5 deals the last about 8 weeks. And so it's a busy time.
Busy time, certainly. 11 portfolio companies, soon to be 12. So that's quite a bit of evidence even within that about the exciting stage we're at in this AI space. And maybe talk us through the decision-making process, just to make it a little real for those who have joined us today, for the 1 or 2 of those portfolio companies, and how you got to that the conclusion to invest.
Yeah. A good example would be a company called Cinch in the accounting space. Now, none of us is going to say that accounting is the most sexy space around, but this is a space where you can actually leverage the power of generative AI as well as non-generative AI to build very sizable businesses. And I won't go into the deep specifics, but effectively, this is a founder whom I know for more than 10 years. He used to work with me in my last startup. He went to lead the AI group at EY, which he built it from the ground up, from 0 to more than 300 people. And he exited EY being a technologist, but having learned the business of accounting. And that's what we really like. People have that dual competence. And so, long story short, is building what effectively is a way to automate the process of accounting, not across the board, but around specific tasks that are repetitive, that still require some good amount of personalization, customization. No tax return is exactly the same. And yet, being able to do that at the level of quality and specificity that is like what a human would do, but let the human focus on solving the hard problems, where the machine can solve the easier tasks. And the front-end piece of this, which is how you acquire customers, is a roll-up. So you use equity financing to build the back-end automation engine using AI. You use debt financing to roll up mom-and-pop accounting firms at the front end so that you acquire customers. It's a very smart play. I think AI will be conducive to things like that, where you've got historically a fragmented industry, but that is now ripe for consolidation and aggregation around deep technology-enabled platforms. That's an example of what we do. And so we got into this company at a very early stage. We put a ticket at a founding stage, $500,000, just to be in, as I said. And when we saw that things were tracking, within less than a year, we injected another $3 million to now be in the driving seat in a pre-Series A safe note model.
Mm-hmm. Interesting. We have one question that's just come in here. I would say, how actively would you typically get involved in the companies you invest in?
So it runs the gamut. I was on the other side, and when founders come and ask me, hey, what is your value add? And I was an entrepreneur myself 3 times over, and I can tell you is that the biggest values that an investor can deliver is the money. Mm-hmm. And the money, and don't ask too many questions. And so I think what we are doing with our founders is we try to ask the right questions at the right time. And it's born out of experience. Of course, we need to get all the reporting and all the proper information, and we have governance rights that are commensurate with the roles that we play at the board and the stakes we have in the companies. So that's a given. However, when it comes to value add, we try to be judicious. The idea is not to barge in and try to co-run the company. The idea is to be very attentive to what the company is doing, where the CEO and his team or her team needs help, and sort of preemptively try to help. Obviously, we're more involved in the companies that are earlier stage than we are in the companies that are later stage. That's a given. What we have, and that's different than most, is a deep understanding of the technology stack, which translates into essentially, a higher bandwidth communication with the founder when it comes to anything that has to do with technology, operations, productization, and so on and so forth. This is where perhaps we're better equipped than most. But of course, we also do, business development help, introductions. We connect them to, other investors when it's time to raise money at later stage rounds, and so on and so forth.
Mm-hmm. And so you hear within that, there's still an element of the people business, despite the fact that we're talking about AI, like the humanity of how you actually still build relationships, the ecosystem that you've come from, your own background in the early stages at Siri along the way, which now is something that's all pervasive in all of our lives. So it's interesting in that. I will just point out for the audience that some of some of you anticipated our lines here from a questions perspective, but please feel free to come in and info@havengreengroup.com if you want to actually add any further questions. We obviously have a veteran on at the moment who obviously of other webinars that has actually just sent it in to us. But in terms of your when you're thinking about the time horizons for the investments, is it preset? Is that really dictated by the market, the acceleration of the company itself, or anything of that sort along the way, or is it is this so basically, I suppose, what's the balance between reactivity and proactivity in terms of the exit, and maybe talk a little bit about how that has worked for you over the last while.
Yeah, it's a good question, because most folks believe that you don't really have a meaningful lever on exits, and it's true that broadly speaking, exits are dictated by the state of the IPO markets, as well as whether you've got a healthy and vibrant acquisition marketplace happening. Where there is an impact that we can see historically in our portfolio, including Fund 1, and particularly with a few companies that we exited really early on, unexpectedly so, I would say, is when you invest in real deep scientific or technological plays that really solve a problem better than anything else. You have a good shot at an early exit at a significant valuation. I'll give you an example. In Fund 1, we invested in a company called Reacta, which was in a cybersecurity space, and they had developed a really interesting approach, AI-based, of course, deep AI-based, to provide a threat detection and response product that was years ahead of the competition. They could effectively match what the likes of CrowdStrike would do with 100x less means at their disposal, right? Or 1,000x less means at their disposal. It was a very small company, just 20, 25 people. Same benchmark outcomes than CrowdStrike. And it was so profound that within 7 months,
Hi, Antoine.
hi, we cut
slightly. This is the problem always with live recordings. So sorry, you cut it within 7 months on that particular example of reactive.
Yeah, it was so profound that within literally 7 months of our investment, the company was acquired by IBM at 7x our initial entry point in terms of valuation, because they just filled a very specific gap in the IBM cybersecurity suite. And you'll find things like this every now and then. So for us, one of our value proposition is definitely to be able to invest in the very deep technology foundation companies, because we believe that this actually is conducive to interesting early exits, which, if you look at Fund 1, give us the ability to return capital early on to investors. We are at 30% DPI for a portfolio that essentially is 2.5 to 3 years old, which is really, really good in the VC space, right? And we think we're going to be able to achieve similar outcomes with Fund 2 in terms of DPI, just given the deep scientific foundations of the companies in which we invest.
Absolutely. Yeah, no, that's yeah, I think it's like, as Mike Tyson said, everybody has a plan until you get a punch in the face, and a 7x on your investment is probably the equivalent of a punch in the face for you on the
Doesn't happen every day, fortunately.
yes. Yeah. Don't we wish? So, and we can, of course, for the second fund. But I think actually focusing on the like, you know, the positives of what you're doing is obviously important. But you know, inevitably things will have gone wrong, or things might not have worked out the way you wanted. And maybe just for the audience, it's also worth hearing a little bit about those. Not only the successful exits, but also adapting to those investment decisions that perhaps you just didn't track as you expected or as the team expected along the way, and if there was some common feature to that has turned into a learning experience for you.
Yeah, for us, the biggest learning experience with Fund One was you cannot assume that because of deep technology, a company will be successful. You even if it is best in class, you will need the deep domain expertise that gets you to really understand the problem you're solving, how you package the solution, how you go to market with it. And I'll give you an example. We had invested in a company called Uno, not the best name, YEWNO, but that doesn't matter. The company was just a phenomenal technology play, phenomenal. Had way ahead of its game. It was able to effectively dynamically extract semantic relationships between seemingly esoteric concepts, and doing that in the financial markets. So you were able to map the world, if you will, building a massive knowledge graph, a massive ontology automatically. And then you would look at this over time. And as the ontology developed over time and you saw new relationships being built between different concepts and different events, then you could effectively predict the consequences of one event on prices of assets, right? And so you'd think that for event-driven or for traders, or event-driven hedge funds, traders, allocators, this would be remarkably useful. And indeed, it was. And this company was able to, get initial traction with a few handful of providers and allocators, and was initially really quite successful. But these guys were they were excellent technologists. They were not versed in the development of financial products. And so that initial success never translated in okay, how do I build a product suite that actually delivers to the industry? And so this was, so far in Fund One, only have one company that has died. That's the only company that has died. But to us was a big lesson. Doesn't matter how good the technology is. You need to have the combination of that and deep domain expertise, so that once you've proven that it works, you very quickly affect product and go-to-market that the customer is going to understand and this customer is going to buy. And so we learned that. And there were a few other lessons, of course, such as logistics and manufacturing, not the easiest place to invest in. It's business models are not easy. Transition from the software world to physical world is not easy. Again, great technologies, but how do you sell in a market that traditionally has been slow adopter? So now we've learned this, and we focus on sectors like healthcare, like cybersecurity, enterprise software, sustainability, and also the picks and shovels. That's a big sector for us, where we can see that the adoption curve is brisk.
Absolutely. I think actually I often think of the story that there's experienced individuals within the marketplace, where they've learned something over their entire 30-year careers, are highly unlikely to become data scientists. However, a data scientist, if they can interpret what's in their head, can actually create some sort of a formulaic way of actually repeating some of that. I think in this instance, they repeated it, but it also has to be something that is needed, wanted, and can be ultimately profitable, so that you can find it attractive to invest in. And as you sit at this stage of your career, Antoine, tell me your own thoughts around what you would perhaps today advise the very younger self when you were embarking on your journey. What would be the kind of things that you would say? Don't do this, do this better, and think more about that. So perhaps just give us a little bit of a feel for the introspection that you can go through.
Yeah, life lessons. So, life lessons are, to me, are just many. But I'm just very happy that I was always very curious, and never took no for an answer. So I think those things that I would double click on day in, day out. One thing that I would tell that, the 25-year-old myself would be trust your gut. When, we sort of smart, quote unquote, folks who think that they can just build models of the world and rationalize things. And so by doing this, we try to make it such that just everything's hangs tight together. The world is not like this. The world is chaotic, and you've got to drive it. And to drive it, you've got to trust your gut. And actually, I see it today in our investment drive. And I tell my team, if you've got conviction, go for it and defend it. I'd rather you have the conviction and go all in and make a mistake than try to rationalize away something that you're a mild believer in, and succeed. And so eventually, if you've got conviction, you have to go. And lo and behold, so far, I mean, again, and I just tie this back to where we are with our Fund 2. Fund 2 has done really well so far. But this is, in this competitive world, where speed is important, build a conviction, trust your gut, go for it.
Absolutely. I also feel that in talking to your team, that culture does actually come out quite strongly, that culture of curiosity, whether it's Terry or Arno or any of the members of the team. It's fantastic to actually hear it from yourself as well as a core principle of what you're doing. Antoine, as always, it's fascinating to speak with you, and AI presents such an exciting opportunity for investors, but it's clear that navigating the space requires deep technical expertise. And in your case, a seasoned track record. You mentioned Jan LeCun, Chief AI Scientist at Meta. I mean, these are billboard names in that space. So you really have put together an AI ecosystem that is feels like there's very reassuring that those involved in it are built out of that domain expertise. I'll finish by noting that new investors in the Fund 2 invest at the funded cost, of course. So all of these great ideas that are on there, like that you spoke about, the 11 companies, now soon to be 12, they don't pay for the value created since the fund is invested in the portfolio companies. So final closing scheduled for September. Definitely good progress. And we've had a couple of very significant institutional investors indicating their interest and following that up with a subscription. So we're delighted for that. That is a great validation of the process that you put together. So anyone interested, please get in touch with your Haven Green representative to find out more about participating in this booming AI investment opportunity, and also learning from the teams in terms of the experience that Antoine and the broader group can bring to this. Antoine, thank you very much for your time today. To all those who have joined us, really appreciate it. We try to keep very strict within the 30 minutes so that you are focused on the rest of your day, which we hope is going to be great, but hopefully we've given you some great food for thought as well. Thank you very much. All questions at info@havengreengroup.com. and we'll be delighted to take and respond to those as they come in, even post the webinar itself. Thank you very much.
Thank you, Paul, and thank you everyone for your time. I really appreciate it.